All right, everyone. By popular demand, I am finally going to analyze Abbvie. I know a lot of you have been waiting for this stock analysis. This is Abbvie, ticker symbol ABBV. This is a biopharmaceutical company that is currently yielding a dividend upwards of 4%. It has caught the attention of many dividend investors because of its impressive starting dividend yield, its impressive growth rate on its dividend, and its impressive revenue growth rate as well. So let's get started. I'm really excited about this video today because I know so many of my subscribers want to see this video, and we are 14,000 dividend investors strong here, and I know of our 14,000 subscribers here, a lot of you guys are curious about Abbvie. You might own it, you might be thinking about owning it. Look, I don't own this thing yet, but I've been watching it for years. It's on my watch list, and so let's jump into it. Before anything, let's look at the dividend. This channel is about passive income and cash flow. I invest for dividends that earn money, cash flow that comes in that can be used to pay the bills while I sleep. And this company pays an impressive dividend, 96 cents a quarter, multiplied by 4 quarters is $3.84 per year. If I take the $3.84 per year, I divide by the current share price, which is $92.68, it comes out to a starting yield of 4.14%. That is a pretty good starting yield in this market in 2018, especially for a blue chip, if you will, pharmaceutical company. And so that has caught the attention of many dividend investors. But perhaps what has caught the attention even more than this impressive starting yield is the growth rate of the dividend. In 2013, just 5 years ago, the dividend yield was 40 cents per quarter. 2018, 96 cents a quarter. So the dividend has more than doubled in just 5 years. It has gone up by 140%. And so people start thinking, hey, what if this dividend does it again? Over the next 5 years, let's say it doesn't go up, it doesn't have a 140% gain. Let's say it's just 100%. It basically doubles. Well, if that's the case, the yield on cost will be upwards of 8%. And so this is what gets a lot of dividend investors excited about this stock. It's an impressive dividend on a starting standpoint, and it has a great growth rate. So that's the dividend. Let's look at the market cap. I like to look at the market cap of companies. I own 38 stocks. I like to diversify by market cap. I have companies of all different sizes. I tend to believe that some of the smaller companies oftentimes have more growth. Some of the bigger ones maybe a little bit more sluggish, but I know some of the big names out there like the Apples of the world have completely disproven this theory. Nonetheless, I like to diversify by market cap just because it's another way to diversify as well, because in certain markets, small companies are favored, in certain companies, medium, and in certain companies, large. Well, when you're talking about Abbvie and other competitive companies like Johnson and Pfizer, all of these are really large blue chip companies. Abbvie, $140 billion market cap, the value of the company. J&J, $380 billion. Pfizer, $256. In terms of full disclosure, I own Johnson & Johnson, ticker symbol J&J, and I own Pfizer, ticker symbol PFE, in my personal portfolio. I'm long on those stocks. I own those stocks. I do not own Abbvie. What I gather through this analysis is Abbvie is a smaller company than J&J and Pfizer, and in this particular case, it's kind of a good and bad thing. I think in terms of a good thing, there's probably more upside here for the company to just grow over time, to gain more market share than it has. But the downside is they're really dependent on one product, Humira. We'll get into this in a second, but they're really dependent on that, and because they're a smaller company, they just have less diversification. They just are so dependent on that one drug, whereas J&J, Pfizer, they have more of a portfolio and they're bigger, and so they can shoulder the risk of one drug a little bit more than Abbvie can. And so you'll see as this story unfolds why Abbvie is trading at a quote-unquote discount relative to its peers. It's probably because there's a bit more risk with Abbvie. That being said, oftentimes as an investor, I consciously take on risk. I consciously do it because I like the trade-off between the risk and the upside. And so I'm not saying Abbvie is bad, but certainly I think there's a little bit more risk. We'll get into it in a minute. Price per share. A lot of people are commenting in the comments below, this thing is on sale, it's dropping, it's down. I look at the stock chart and it's not really down that much. There's like some chatter out there in the news about there may be a lawsuit, they may owe some money, but the thing's not down that much. Here's the facts. 1 year ago, it was trading at $87 and change. It went up in the last 12 months to a peak of $123. Now it's at $92.68. It's actually still higher than it was a year ago. Yeah, it's down from the peak, but even in the recent months, it seems to be somewhat flatlined. It's not really taken a nosedive, if you will. And so, yeah, maybe it's a relative quote-unquote value based on the share price dropping from the peak. But in my opinion, I feel a lot of dividend investors, they may be placing too much emphasis here in that it's in my opinion not gone on fire sale yet. It's basically where it was a year ago, if not a little bit higher. And so that's just where the price per share has been. But certainly investors are going to be a lot happier buying at 92 than 123. So I think that's a gift, at least, is that it's down from its peak over the last 12 months. Anyways, let's look at the forward PE. Here's where things get a little interesting. Compared to its peers, Abbvie is trading at a relative discount on a price-earnings PE ratio basis. So you take, basically what I did is I looked at the forward. I looked at fiscal or calendar 2018. I look at at this year. I look at what's Abbvie going to earn, what's J&J going to earn, what's Pfizer going to earn. I take their current price per share, and I divide by the earnings per share, the consensus estimate from the analysts, which is plus or minus going to be pretty close. Abbvie, the forward PE is an 11.78, J&J 17.42, Pfizer 14.63. Clearly, based on this analysis, Abbvie is trading at a discount to its peers. Not only that, a PE of 11 for the pharmaceutical industry, that's a pretty low PE, especially in a market like the one we're in now. So the price per share argument doesn't really, in my opinion, convince me. Is it on sale because it's kind of trending down? Not really. But when I look at the forward PE analysis, then I'm like, okay, yeah, I think this thing is probably on sale a bit compared to its peers, because it's trading at a PE of 11. That's pretty fabulous. And so that gets me real interested. That combined with this, the yield, the growth rate of the dividend, and the current PE or forward PE of 11, not bad. It gets me real enticed here. Should I add some Abbvie to my portfolio? We'll see. What do you think? Should I buy some Abbvie? Put it in the comments below. I'm so torn on this stock. I don't know what to do here. I probably will sleep on it a bit more, but you'll see why. Okay, Humira. This is a drug, and look, I am not a doctor. I am not an expert on these things. Quite frankly, it doesn't even interest me. This is what's funny, is a lot of just different people, they have different interests in life, and for me at least, knowing all these drugs and what they do, this and that, it really does not interest me. In fact, it may be one of the most boring things that I could do, and that's why it's hard for me to invest in this industry a bit, and why I gravitate towards stuff like J&J, just because I know across consumer products, across drugs, medical devices, they do it all. It's kind of like a blanket portfolio approach, bam, one and done. Whereas with something like this, with Abbvie, because they're so dependent on Humira, an investor would probably be, in their due diligence, it would probably be well advised to really understand what that drug is, what it means to society, what it does, what the prospects are for the future. Quite frankly, it's probably important to really understand their drug pipeline as well. A lot of these things, unfortunately for me, just don't interest me that much. But anyways, what it does is it treats psoriasis and rheumatoid arthritis. And I know rheumatoid arthritis is a big deal, and it's a condition that affects many people, and Humira apparently helps with it. It helps quite a bit. Now, the challenge with Humira is it costs, at least according to an article I was reading, let's say someone didn't have any insurance. What are they paying for this thing per year? $50,000. This is one of the challenges with the United States healthcare system. We'll get to this in a minute in revenues, because they do skew towards US. This company is really dependent on United States revenue, which has, in my opinion, probably a broken healthcare system, or a challenged healthcare system as well, where the cost of their main drug, their main solution, costs the average consumer $50,000 per year. Is that sustainable? I just don't know. I mean, I think if you have a illness or you have a issue with your health, obviously most people are going to do whatever they can, and I really pray for these people. I hope that people with these psoriasis and rheumatoid arthritis conditions, that I wish them well. I really hope that whether it's through Humira or other means, that they get the cure or they get the treatment that is required. And I feel kind of like just $50,000 a year, that just seems awfully high. Wow. And so you hear a lot about this type of thing in the press from time to time, and the reason I'm bringing this up is there's a lot of disruption happening in the United States right now. There's a lot of thought. Should we rejigger the entire healthcare system? Who's to blame? Is it the hospitals? Is it the insurance companies? Is it the drug companies like Abbvie? Is it all of them? All of the talking heads, the politicians, this and that. A lot of talk and looking out when, when the millennials start taking political office. What will they do? Let's say the administration changes a bit and you get some really progressive ideas on changes that need to be made. What will this mean for these types of healthcare companies? Now, quite frankly, this is a risk with Pfizer, J&J, just as much as Abbvie, but I'm just kind of pointing it out because this is an industry that does not come without risk. There's risks with any industry, and this industry has a unique risk, and I think the unique risk here is these costs. Are they sustainable? And quite frankly, even if they are sustainable, are the powers that be, are they going to allow it? Or are they going to put an end to it? I just don't know. I have no idea. Or maybe not put an end to it, but put a ceiling on it, put laws in place that force these companies to change their pricing. I just don't know. Anyways, check this out. Revenue. Total revenue is $28.2 billion. That was the revenue from 2017. I pulled that from their annual report. Thankfully, in their annual report, Abbvie breaks down revenue by drug. And guess how much revenue came from Humira? $18.4 billion. So I take 18.4, I divide by their total revenue, 28, I get 65%. 65% of their revenue comes from this one drug. And this is a drug that costs, for each patient or an average patient that's on it, $50,000 per year. And it gets even more interesting. Their patents are expiring soon. These drug patents, it's hard being in the healthcare industry. You develop these drugs, the patent is only good for so long. Sounds like they've done some really fancy footwork, and at the last minute they filed all these other patents that are kind of related to the drug. Basically curtails generics for a few more years. But it looks like in... boy, I don't know if I wrote this down, but it's coming up in about a year or two. I think it was like 2021, 2022, 2023, maybe 2, 3, 4 years. Somewhere around there, generics are coming. They're coming, and consumers have a choice, especially people that don't have really fancy insurance, who are paying out of pocket a lot. Should I go with Humira at $50,000 a year, or can I go to the generic that's going to be a lot cheaper? And so the risk here is just a few years away when all these patents expire and the generics start coming. 65% of their revenue is at risk. Now, will they lose 65% overnight? Of course not. Of course not. It will be a decline potentially over time, though. It may be that each year these generics eat away more and more and more. And so that's the risk with this company. If there's one risk with this company, it's Humira. I think if there's one thing good about the company, though, that's also it. It's been driving the growth. It's this great, apparently, miracle cure or miracle drug that's doing all these wonders, and it's growing. I think probably the demographics out there play into the favor of this treatment right now. And will those demographics, meaning the aging society, will that always be there for Abbvie when you're looking way out? You're looking, 50 years out. I don't know. And so anyways, that's just something to be aware of. Now check this out. Revenue, $18.2 billion US, 9.9 billion international. So they're 65% US, 35% international. Typically with the companies that I like to own, I would like it more even. I would like more exposure international. And this kind of polarizes this Humira problem, because if there is going to be a healthcare system overhaul, it's going to probably be in the US. And if there is an overhaul, will it negatively affect these types of companies? Potentially. And okay, well, now we know 65% of the revenue comes from Humira, and 65% of overall revenues are in the US. You can connect the dots here pretty quickly. There are some risks for this company. That's a lot of risk. Okay, what else? So revenue worth mentioning is up. It's up a lot. It's up 23% in just 3 years. And the sales of Humira and other drugs that they sell keep growing. And so this is a company that has a real strong top line growth. I think that's really promising. And I think it's really promising because even as these generics come, if this thing is just growing really fast, maybe what happens is the generics kind of eat away at it, but it could still grow or at least flatline while they mature their pipeline and get other new drugs that will solve other health conditions. And so obviously this company is pouring money into research and development. They have a drug pipeline. Any healthcare company that anyone invests in my opinion, ought to have a good drug pipeline. That's really important. And like I said, I'm not an expert at this stuff. And quite frankly, it just does not interest me that much. And so it's hard for me to analyze drug pipelines. But they claim that they've got like a drug pipeline that's going to deliver a lot of revenue potential. Like I think they said like 35 billion or something is the long-term potential from this pipeline, and we know now that they're doing 28 billion a year. And so what they're saying is that the drug pipeline could potentially replace any issue that happens to current revenue streams based on patent expiration. So that's a good thing, and it's surely these revenue trends are good. Now, what I didn't like as much is EPS. When I look at EPS over the last 3 years, earnings per share, it's up only 5%. And I looked, why is the revenue way up, but the earnings per share only up a little? Well, what happened is their cost of goods sold is way up. It's up 56% in just 3 years. And so why are cost of, and they break out like research and development, selling, general administrative separately. And so I'm saying just pure cost of goods sold is skyrocketed over the last few years. I don't know why that's the case. If you know, please comment below, share with the community. I don't know, but I think the revenue growth is good. I think the dividend growth is good. Look, I think honestly the Humira thing, thankfully this drug is just so popular and it's growing so quickly that even the generics, I think they can deal with it, but it's a challenge at 65%. But why are the cost of the goods going up so fast and eating into the profits so much? At the end of the day, company is not in you can't pay the bills with revenue. You pay the bills with earnings. And so cost of goods are up. I'm actually seeing this a lot of industries now, just raw materials and such, they're up. But what's interesting about this is it's not like, okay, there's all these like, it's not like you're making food where you have to go to the farm and it's expensive because you have to pay to harvest the crop and get it into the railroad and ship it over here and then package it and this and that. I mean, I'm simplifying things here, but I'm sure the process is really complex for making these drugs. That being said, margins are typically really good in this industry, and so I just don't know why cost of goods sold are up so much for Abbvie. It just it's really, really interesting, and so I'd love some insight if anyone knows about that. But it's a red flag to me. Something else I want to share is this long-term debt. I put it over here. Abbvie is at 37 billion, J&J 32, Pfizer 41. So Abbvie's kind of in the middle, but look, J&J and Pfizer are both bigger companies. They can kind of support more debt. And so the other question is, do they have too much debt? I don't think so, because I looked at their financing cost and it was just not very much. And surely interest rates will be going up, but they've got more than enough cash flow earnings to cover those interest payments. I just want to be cognizant that they don't try to raise their debt levels too much further from here, because that's a potential risk. So where I'm at with this thing is I love the current yield, I love the dividend growth rate, I like the revenue growth rate. I think on the con side, cost of goods sold, why is it up and why is earnings per share growing so slowly? And Humira, why the heck, what the heck is the future of that at 65% of revenue? That's a big percent of revenue. I'll tell you, Abbvie is an interesting company. They used to be part of a company called Abbott Labs. Way back in the day, I actually owned this company before they split. In fact, when they split, I may have owned it through that. I don't remember what I did. This was before, this was way back. I'm trying to remember. It's either before we bought our first home or second home. I don't honestly remember, but it was before one of the home purchases. And this was one that got sold. This is one that got sold to pay the down payment. It never got bought back, and the reason it never got bought back, quite frankly, is I liked them better as a combined company. Because Humira is such a big percentage of revenue, I felt so much better when it was a combined company and you had all of the Abbott Labs products and medical products that were part of it for diversification. It was more of a Johnson and Johnson type company back then, whereas now it's a pure play pharma. And there's benefits to that. I think they broke it apart, tried to unlock shareholder value, and they did. This thing's done really well. Since Abbvie's inception, based on their annual report, when it's compared to the S&P 500, this thing has really done better. And another point, dividend stocks, they can definitely beat the S&P 500. They can do that. And I've shared this in quite a few videos recently, but I love pointing it out again because I think there's a prevailing thought out there that there's like a few types of investors. Growth investors who, of course, they beat the index, although time will tell if that will always be the case, especially with some of these real lofty valuations. There's kind of the index investors that can't lose because it's they're at least matching the index. And then there's these dividend guys who, man, they got their great cash flow, but you know what? They don't beat the they can't beat the index. But fact of the matter is many of the stocks I own, I've shared recently many examples that have done phenomenally well. And here's another one I don't own that has totally beaten the S&P 500, at least based on their annual report from inception through year 2017. So that's where I'm at with this thing. I'd be curious if you own it, if you're thinking about owning it. How do you come to terms? Cost of goods sold thing, they'll probably, I don't rank that as high of a concern as Humira. I think the main question I have for the community is, how do you come to terms with Humira? Like, what is your take on that? And what is your take on the U.S. healthcare system, on some of these drugs just costing like $50K a year? Look, I'm not trying to say anything should change, quite frankly. I'm an investor. I'm a capitalist. I own companies like this, and so if there were to be an overhaul, I think there are a lot of stakeholders at play, and quite frankly, some of the stakeholders are the very people that own these companies, and I think everyone needs to be considered. But how the heck do you come to terms with that? I would love to know. And so, am I going to buy this? It's one of those things I've just been on the borderline for a long time. If the starting yield dipped, the price dipped, maybe the starting yield got closer to a 5%. I remember, quite frankly, when this thing was way back in the day, I remember there were days when the starting yield was higher. Maybe I'm not remembering correctly, but I thought I remembered seeing this with starting yields up at like 6% even, or higher, even at like 7%. And I remember even back then, I was kind of tempted, but I was like, oh, Humira. And so I'd be curious like what you guys think. But yeah, maybe if the starting yield got to a 5% in this market, I'd get a little more interested. 7%, yeah. 7%, I'd probably do it. 6%, I'd probably do it. 5%, I'd start thinking a lot more seriously. 4%, I don't think it's really trailed off enough, although that PE of 11.78, that is kind of compelling. And I got representation already from J&J and Pfizer. And J&J is my number one favorite position of all time, largest position. I'm trying to remember, is it still? Yeah, largest position in my personal stock portfolio. So I rest assured at least having that exposure as well. So hey, thanks everyone for hanging in there, for waiting. This has been a request from a while, and I get it over and over and over. And so I'm so happy to finally do this video. And surely I'm not trying to put down anyone who has invested in Abbvie. Like I said, I'm just trying to be fair on both sides here. And to be honest, I'm really on the fence. It's hard to get me on the fence. It's hard for a stock to win me over. So the fact that I'm on the fence, I like this thing, and I like it a lot. I like this industry. Like I said, I'm not very interested in researching all the drugs and this and that. That isn't as exciting for me, but I like the industry. I'm talking from more of a financial perspective, from an investment perspective, from a portfolio perspective. And I think it's an industry that requires a little bit of diversification. And that's why I would consider it, quite frankly, because if I had 3 stocks in this industry, I'd probably feel like I got a little more diversification than I do now. And who knows, should this be stock number 39 in my portfolio? I don't know, but I'm on the fence with it. And I've been that way for years, and it honestly drives me nuts. So thanks, guys. Before I leave today, in terms of full disclosure, I am long. I own 2 of the stocks mentioned today, Johnson and Johnson, ticker symbol J&J, and Pfizer, ticker symbol PFE. I own those 2 in my personal stock portfolio. In terms of a friendly disclaimer, I'm not a licensed financial advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market, please consult a licensed financial advisor first. I'm just sharing my personal journey here on YouTube just for fun. So if you appreciate this video, I kindly ask you to comment below, give me a thumbs up, subscribe. All of that means the world to me. And 14,000 of you already have done just that. You have subscribed. It means the world to me. I am so blessed, so grateful for this community, for this growing channel, and really excited to finally get this one in front of all of you. And I can't wait to see what you think. I will see you in the next dividend investing video.